Sarah, this has all the ingredients of a bear market rally. We had near record pessimism, whether it's positioning by hedge funds, whether it's positioning by commodity trading advisors, whether it's these polls from the American Association of Individual Investors. You took all of those, you had the highest level of bearishness ever. So that sets the stage. All you need is a little positive spike, and you can a positive piece of news, and you'll get a spike in the markets, and those spikes are stronger because they include short covering. What was the spike? Well, we had an interpretation of Jerome Powell's comments that seemed to insinuate that he might not get to 3.5% on the Fed funds rate. That eased some of the fears. Then you had earnings. Earnings came in better than expected, 70% beat rate, 70% revenue beat rate, and all of a sudden the market's trading up. It breaks above the 50-day moving average, which was a key technical level, and now you have fear of missing out. That's a classic look of a bear market rally. Now, it doesn't mean the market's always going to do what it does historically. It doesn't mean that this can't be the onset of a new bull market, but it sure looks like a bear market rally. And we're sitting in front of August, which has been our worst month over the last, well, really since the mid-'80s. And you have September, which is historically the worst month. We have all that in front of us. We have a market that's made a big move. All I'm suggesting is I think a retest is likely, and investors need to be careful about buying in here. You should use a rally like this to sell some stuff that you're trying to get rid of. You don't want the cheese anymore. You want out of the trap, and use an ensuing sell-off, if you get one, to nibble at things that you've been wanting to own. I think investors have to be careful here, and the semiconductor index is starting to roll over as well. Yeah.